Hi guys, welcome to the broadcast. Sorry if there's a little bit of lag at the moment. This is episode 3. There are some episodes in between these where we look at different topics. But on this session, we're going to re-look at Escape Hunt, one of the stocks that we reviewed recently. And we're going to look at the digital offering in particular. There was some documentation that was released to the market fairly recently. And we're going to go through that, and we're going to talk about the pros and cons, and there may be some devil's advocate being played as well, which is good to test assumptions. And yeah, we're just going to talk it through again. I'll have the deck open. Anthony, do you want to let us know anything at your end? Have you had any thoughts off the back of the original conversation we had?
Nothing too specific at this stage, but keen to go through the new announcement.
Cool. Okay, well, if you give me a moment, I will. This is released less than a month ago on March, just bang on a month, March 17th at 9 a.m. Apologies, I hadn't seen it beforehand, actually. I needed to. So I'll just pop this up and we'll go through it. So it's 1 second. It's where they interview directors talk. I haven't heard of it before, actually. But the CEO, Richard Hartman, chatted to them. So can you talk us through the highlights? They were just released a trading update. So the main thing was that they reduced their cost base. So they said, firstly, management of cost base over 2020, right? And they feel very good about how they've managed those costs, which I think is positive. Secondly, they've managed to dramatically expand the owner-operated footprint. They had 9 stores going into 2020, and they now have 17, including a site that was purchased in Dubai and 2 in the French region. So they think that basically that this will really turn us into a cash-generative, profitable business. I think that's based off the stuff we discussed in the last call, where there was a 31% return on cash. I think that kind of cements what they're just saying, that when they buy more own-operated stores, they see a kind of potential there. And then they said the highlight that they wanted to draw attention to was this launch and progress of our digital offering. If anyone watched the previous video, and I highly recommend doing so, myself and Anthony went through everything. We didn't really talk about or forecast anything to do with this digital offering. And the CEO has said he's initially, which was initially a response to COVID, right? But now is going to become very much part of our strategy going forwards. I'm going to go through this, and then we'll talk, if that's okay, Anthony. If anyone's watching this, feel free to comment now, or even later on during the video. We'll try and get back to comments. So question 2. So you're well positioned with COVID. What actions did the company take to mitigate against site closures? And he basically says that he took care of payments and deferred them if they could. The furlough scheme was important, which is very, very important. They cut non-essential expenditure. And then they're ripping up the rule book was the stage 2. And that was what they could do to generate revenue. And basically, they say it was pivoting towards digital. So basically, what became a significant suite of digital propositions, and they proved to be very, very successful and very popular with our customers. Just for the viewers out there, like typically directors and C-level people don't use words lightly. So they don't use expansive wording, they don't use extreme wording, they don't tend to double up unless something's quite important. So in this case, he said it's very, very successful and very popular with our customers. They started to drive revenue in year, and moreover, as I said before, will become very much part of our strategy as we go forwards. And he says the third piece was about how we drive revenue for tomorrow. And that's basically buying into things. So he's bought into the French master franchise and a Dubai master franchise. So previously on the call, I thought that they were going with a UK only model, but it looks like they're confident with these international operations. So they think they're going to, again, he mentions that this will kind of give themselves the best opportunity to be cash generative business.
Can I just ask, the way he says buying in our French and Dubai Master franchise, I thought they were selling franchises rather than buying.
Yeah, so this is interesting. It's a very good question. So I think with France, they have, from memory, I think they have about 10 stores, something like that, 8 to 10 stores. And I think they've bought in to 1 or 2. So I wonder if the original strategy was franchising, but now they realize, I don't know, maybe they've learned tactics to increase the revenue. I think from the last conversation, we talked about cost reduction. So maybe they're thinking, they can reduce the costs. They've got some other ways where they're kind of growth hacking revenue in some way to achieve that 30% plus return on cash. So I think they're saying, when they say buying into the franchises, it's maybe that, I don't know, they sell franchises and then at some point in the future they buy them out. Which is, I think, is a really interesting model, because they get some money for the franchise to set it up and get the ground running, hit the ground running, and then maybe 2 or 3 years down the line. We did mention that previously. It wasn't something I was aware of until I thoroughly researched them and found this really good interview online. So I think it's interesting. But I think, basically, I think they believe that that it will be a highly cash generative business, this offline piece as well. So once demand returns, they'll have a broader offline exposure as well, which is interesting. So now he says, now that you've established digital and other play at home products, this is the other lines of business we really didn't talk about too much. But let's see what he says. So he says, well, it's been a really lovely progression. Actually, but back in April, May, we launched as quickly as we could play at home games. So downloadable play at home games. These are really well received. Those are really well received. And from there, we iteratively what we refer to as zoom into the game. So a collection of games where you're using our games masters as avatars, essentially. You're at home with your team, playing with your teams, but you're using our games most as avatars. I'm not quite sure I understand that, but we can dive into it a bit later. We then progressed further and did a licensing deal with an IT company who allow us to use their platform. And this is smart because it means that they don't need to spend a lot of money trying to build stuff like that, which is expensive. Then they host their digital content. So now they use their platform to host our digital content. So much larger scale games, which we can now host on these platforms. So I think what that means is they can go very, very big. That culminated in December in really a very, very good month for digital revenue. I think that sounds like it's exciting. And indeed included some events which we were catering to 350 or so players at one time, which was really quite significant, we think, in terms of highlighting where this opportunity can go. So yeah, I think that's it. Like I said, I'll go through, it's only 1 or 2 more questions to go through, but I think we're getting the kind of picture here of potential opportunity. As you mentioned earlier, you exchanged contract with your French master franchise partner. Can you expand on that and tell us a bit more? Well, they completed the deal yesterday, so that was 1 month and 2 days ago. So they put out an announcement referencing that. Our master franchise has done a fantastic job over the last 5 or 6 years, really established a company in the territory. And that business incorporates both 2 owner-operated sites, so that's interesting, and a site in Paris and a site in Belgium, both of which now will be part of our owner-operated portfolio, and then an additional 11 franchise sites. So that's interesting. So they had 13 stores and 11 sub-franchise. So this is going into the structure of franchising in general. The parent company, which is Escape Hunt, will create agreements which are known as MFAs, Master Franchise Agreements. And within those agreements, in some cases, they'll allow a sub-franchisee, for example, the France Master Franchise or Master Franchisor, to allow them to have some sub-franchisees underneath them. So it's a bit like a family, and it's a bit like a family to a certain extent. And Escape Hunt is the granddaddy or grandmother, and the master franchisees are the next level down, and these sub franchisees are the children. So there's kind of 3 levels there. But at every stage, Escape Hunt makes money. Last question. So then, just looking forward, what can we kind of expect from Escape Hunt in the next year? So this was, a month old, so it's presumably the next 11 months or so. So as we've laid out, we've got this 5-point plan. That goes back to the things that were in the deck from the last video. So if you're interested, take a look. As a little bit of context to this stock in this video, this stock has appreciated 11x in the last year. That's 1,100%. In the last month, it's gone up over 35%, just for reference. Doesn't mean that it's going to continue going up, obviously. But I did publish a video on this channel about asymmetric trades that have the potential to go up more than the potential of going down. But just my opinion, I think this is one of these. So just to finish off, continual development of our owner-operated estate in the UK. Getting the best deals, which apparently they're receiving right now because of site availability, which is a mark of the market right now. Basically, I think there's a lot of availability for low-cost retail at the moment. So they'll continue to grow the UK estate. So that's number 1. Continue to support existing franchisees is number 2. It's clearly in relatively small businesses. Everyone's been very, very hit, so they need to support them. So now they're considering best way to integrate the French business into the overall estate. Point 3, I don't know if this is a good or bad idea. I mentioned in the previous video, franchisees that start incorporating owner-operated stores in multi-language, multi-country estates, it can get quite complicated quite quickly. So we'll see what happens, particularly on the multilingual side. We'll see what happens there. Point 3, this PCH, this is the US opportunity. They've only got 2 stores in the US at the moment, but we've made really good headway with PCH over the last few months. We're now at the stage where we're really quite actively starting to sell franchises there. We're really quite actively starting to sell franchises there. They can't say the number because it's not legally allowed for them to say the number, but they're saying we're now at the stage where we're really quite actively. That suggests that it's going well. So growing our position in the US market becomes a really key part of our value creation over the next 2 to 3 years. So for me, for them to say that's really quite actively selling franchises, plus it's a really key part of value creation, how I'm interpreting this, and feel free, Anthony, in a moment to comment on it, is that it's going to be a significant percentage of the business in the next 2 to 3 years. Lastly, we've got our product reach and breadth. We've been looking to use digital very much as a way to offer a broader range of products to consumers, also to offer the range of products to a wider range of consumers, particularly in the digital space, to corporates who might have global teams that can't come together physically. I think it's a fantastic idea. Or they might have teams of 200, 300, 400 people who, again, can't come together physically. So for us, continuing to do what we made over, the digital proposition will be very much a mark of the coming 12 to 18 months. I'm going to stop the stream right there. I think we've covered everything. I think it's really interesting. Anthony, what are your thoughts?
I can well believe, just based on the size and value of the economy, that America could be on a par with the whole of Europe.
Yeah.
That's not a stretch, and it has the additional advantage of a single language, for example, not just a single currency. So I can see how it might scale relatively easily compared to French here, German there, Spanish, and whatever else in the mix on top of English. But for me, the really interesting bit has to be the digital.
Yes,
they're using increasingly strong language behind it, but the real question is, are there any numbers available? Are they breaking out digital performance? When do we first expect to see any numbers, frankly? Is there any way to model that in the meantime, or are we just literally taking it on faith because they're using a few adjectives that this is where the business is heading?
Well, that's something I'd like to play with now. It's something I've not done before. but I think it's exciting to try it live. If I can share my screen, go on, Anthony.
Do we know, 400, 350, 400 people on one game? Sounds excellent. Do we know what they're charging per person? Is this £5-10 each, more, less?
Yeah, let's do that now.
If it lasts an hour and they're charging £10 a head, and 3/4 of that or more is profit, and I don't know how far it scales.
Can you see my spreadsheet here?
Yes. The
Great.
cells are quite small. Perhaps you can zoom in a touch.
Yeah, of course.
Yeah, that's good.
So let's just do UK, because these are already quite big markets. Actually, should we just say Europe?
If you like.
Yeah, I'll just say, because it's going to get quite messy. USA and then rest of world. And what we can do is we can almost say, the way I was thinking of modeling this was so like number of stores and then number of current customers, and this is like a like complete guesstimate, but it gives us, I think it gives us a basis. So in Europe they've got I think somewhere between 40 and 50, let's say I think 40 stores. The US, they had 2 stores. I don't think it's quite as many as 40. Sorry, I'm going to refer back to our spreadsheet where we've actually got it out. Here it is. This was the last bit of information we had. So there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There's actually 2 in Bones. There's 14 in the UK. I think they said there was 2 in Belgium. So that's 16. And they said there was 11 in France. That's 28, 29, 30, 33, 34, 35. So I think that's the number we can go by. There's probably more than that, but let's say 35 for now.
They really only have one in the Greater London area, and that's Watford.
Yeah.
You would have thought London itself would be...
you say Reading's in the west. Yeah, but you're right.
Yeah, Reading's as much Oxford as it is London.
Yeah, Kingston.
Oh, okay, Kingston. So they've got one in very north and one fairly south London.
And Cheltenham's on the east. So what I think their strategy is quite it's kind of that commuter belt outside of London. Cheltenham's just Essex.
Okay.
Yeah.
So they're out of town. There's none in the city centre.
That's right. So previously, when we modelled it, just for people that wanted to see, we only modelled physical stores, and we did a little model for the US. And I kind of thought that they could have 50 stores by 2025 as the best case, and that could give, on a 20x multiple, that would give 40 million based on the revenue that we forecasted. Just to give viewers a note, Cakebox, another franchise, is valued somewhere between 30 and 40x, and Domino's Pizza, another franchise company that did very well, was valued at 40x as well. So this could easily be.
Just to come back to an original point, are you looking at price to earnings or price to sales?
This is price to. This would be revenue, yeah, price to sales. But because this is franchise fees, there's virtually no cost. This is pure money that they're getting in, and this is So it's not specifically profit, but I think because it's like someone signs up through PCH, their partner. I don't know how much Escape Hunt's really going to have to do to get that money in. I didn't really put it in because I think it would be so minimal. But yeah, we could maybe reduce it by, I don't know, 1 or 2%. But anyway, I think this is super conservative because it's just on a 20x multiple. And the point is that we haven't modeled in any digital revenue. So let's go back. Let's go back to the spreadsheet. So we've got 35 stores, 2 in the USA. Actually, we can't go back because I need to get the rest of world numbers.
I mean, if you knew that it was fast growing and would scale for a while, 20 times revenue is not unheard of anyway.
Yeah.
Though it is quite a rich valuation.
So and I'm going to make a massive assumption here because I don't know the number of rooms. I think it's 4, but I don't know. Let's assume that it's 4 per room, and let's assume that when they were before COVID, that they were booking most hours. I don't know.
You mean 4 rooms per site? Is that what you're
Yeah,
getting at?
this is to get the average, the kind of number of customers. Whoopsies. Like I said, this is the first time I'm modeling anything. It might include some spelling errors and maybe some statistical errors. So per store, if there's 4 rooms per store and it's 4 to 6 people per hour, let's model that 5. So let's say 20 per hour, and let's say it's 10 hours. So 200 people would be the max per day. So this is where we have to guesstimate a little bit. If it's 200 people, kind of like average per busy day would be 200. I don't know how many customers there might be. We need to have some kind of ballpark.
How are you coming up with that figure? What?
Oh, so it was 5 people per room, and there's 4 rooms. That's 20 times 10 hours of work of the working hours. But I don't know, actually. Maybe they're open more than 10 hours.
Would it be a very long day, first thing in the morning to last thing to late into the evening? I mean, it's possible.
Yeah, let's just have a quick look. They have staff rotation and things, so they might have shifts. I don't know, because I'm thinking kind of for corporates and for parties and things. They might have.
It's possible. I mean, would you do this at 9 a.m. is what I'm asking, or are we thinking? We're thinking what, noon to 10 p.m. What kind of?
I was kind of thinking, yeah, like something like that, 11 till
9.
Yeah. That's
How's it going to be in the Harlequin, the big shopping centre?
It's not live yet. It says they're coming soon. So I know they're live in Birmingham. So let's have a look. For non-UK people, Birmingham's the second city in the UK. It's the same book now.
Maybe the likes of Debenhams and John Lewis vacating space has freed up room for new businesses to step in.
Yeah. Doesn't say the work times, but they're having kind of sign-ups on the internet, which is good.
Anyway, we can take a guess for now.
Yeah. Let's guesstimate and say that it's 200 for busy days. I think that I would say the majority of people, that's probably like weekends. I don't know. I'd kind of guesstimate that they'd probably have like 100 per day during the week. So it's probably, maybe 400 or 500 during the week and 500 on the weekends. So that's, should we say about 1,000 a week?
Yeah, I mean, do you think that's an average or a best case scenario? Where is it in the?
Yeah, I think it's pretty high.
So, what you're really modelling is the maximum capacity as opposed to average performance.
Maximum. It's just 5 rather than 6 people in a room. Maybe we can look at it.
Sure, 4. But I know from doing a virtual reality experience, the maximum you could have in a team was 8. But as long as you booked a minimum of 5, you had the room to yourself.
Right.
So the average number playing won't be 8. That's just the capacity. The average is probably 6. Bearing in mind that you can have exclusive with 5 or 6.
So if we model it at 4 people in a room times by 4 is 16. Times by 10 hours. We don't know if it's 10 hours, we need to check, but let's just say it's 160 for a busy day. For a weekend, then 320. And then maybe let's go like, maybe on a not so busy day. Sorry, I'm doing this a little bit messy. Say weekday. Let's say it's like not quite as bad as half, but nearly as bad. 100. So you've got 500 plus 320 would be the kind of mid case. 320, that's 820 per week. High case, I'd say would be 1,000. And let's just reduce this by quarter. Okay, So that's per store. Do we feel? And I know this is not very scientific, but we have to get to something before.
I think rather than low. Okay, I mean, I don't know whether these figures are optimistic or not, but let's run with that for now.
Okay, we'll put that by half then.
Yeah, on a day when things are not going well, I can easily imagine them not running at more than half capacity relative to a good day.
Well, what I'm going to do is I'm going to play devil's advocate and go somewhere in between. I'm going to say it's 500 customers a store for places like Birmingham, London. Big, decent. They've got a decent locations, so I think 500, 100 a day on average per week is okay. So we times that by. The question is, how many are net new customers per week? I think it would be quite high.
Does that matter?
It does, because it's for digital. It's the total database times by the percentage of people that are likely to join a game.
Oh, I thought we were looking at in store. You're trying to do digital here, right?
What I'm calculating is basically the number of in store is going to be the easiest people to convince to go digital, and then they'll have the customer acquisition of people that don't know about them, which will be a little bit harder, which is obviously everyone else in the world.
I don't know.
Well,
I don't know how strong the relationship is. I mean, they found they had no one in store for the past year and managed to do all right, they're saying, from launching digital from scratch. Sure, they had some customer base to tap into. Right, but I can't imagine that the majority of their digital customers in the last year were existing customers. I mean, maybe it was, but when you had 400 a single call, they were all
350. Yeah. Well, let's just work this out, because it's only going to take
3 minutes. Yeah, go on.
Let's say that they're not busy all the time. So let's again be quite conservative and say times 45 weeks. That's one store, and then times by this amount of 42 stores. Remember that they've got that digital sign up thing online anyway, so you don't have to be a customer to sign up. So I think I'll probably add in another 5,000 there. You just saw this might be too much. I don't know. It looks quite a high number, but anywho, you have to have something. All right, so we've got that number. I think we can probably hide all this now. Effective database. It'd be interesting if anyone would ever know this, and it'd be interesting to find out how accurate our numbers were. So I'll just hide this now.
Over what time period is this you're trying to work out?
I'm trying to work out kind of a now state. So if this
I'm saying is this per annum or per week, per month?
Yeah, this is per annum. Sorry, yeah, that was per annum. But I don't know. That's a good point. Yeah, because they've been around 5 years, so they could have more than that. Yeah, I think probably. I wouldn't be surprised if.
Do you know what they? Yeah. Do you know what they charge?
Which for which?
Any of this?
I really think it depends on what you're doing.
Go to maybe subscription. See if we can get some.
Yeah, I've just looked now and just seen they have a subscription. I didn't know. I think that's new.
I think so.
I don't remember seeing that a few weeks ago.
Obviously, they'd be delighted with subscriptions because it could be reoccurring revenue.
Exactly. So I just clicked on the subscription. It's taking me to here. So I think it's so new that I don't know. I'll click it again just to see.
It's the right page if you go by the.
Yeah, that's true. Yeah, subscription. Okay, so let's just give it a bit of a whirl and say hosted digital games. So they've got one game. So you have to, at the moment, you have to phone to book it. And that's hosted digital games. What about digital games? This is not very clear, actually.
Yeah,
so
I know.
Let's go with Code Breakers. £10. I thought it was £10.
So yeah, funny enough, the guess at £10 per person is spot on.
But look at this. It's not very 2 to 4 players. Like,
yeah,
a big game. Like,
well, this is clearly not the bit that scales.
Yeah, there's obviously something else. Remote escape rooms, maybe.
try that.
It's funny actually because
They haven't built the website for the checkout experience yet. That's clear.
yeah, we're not going to phone them. But it's the fact that they've got powered by, so these are
it may indicate that there's also an element of salesmanship involved in converting people. They figured they have more luck over the phone.
But I think it's exciting that they're getting hundreds of people to sign up when it's not that easy to sign up. I think that's interesting. Anyway, so it's about £10. I'm just going to leave it at that. Like, they may have 2 or 3 million customers, or even 5 million customers. They have 500,000, but I think around a million is about where I feel comfortable. How about you?
It's hard to say, truth be told. I wish we had more to base these numbers on. Okay. If it was a year on from now and we had the first year's worth of figures, it would be much easier to do this. We could just assume a growth rate. To try and predict it based on very little, your guess is as good as mine, or better, frankly.
Okay, well let's go with revenue per game. So it's $9.99.
Yeah, I don't know. I mean, the multiplayer games at £10 a person and 200 or 300 people, that's a useful amount of money per hour, but how many of those can you run back to back in a day? I'm guessing they're relatively infrequent, once every few days or so.
I don't know if
it's not clear to what extent it's going to scale.
It's not clear also if they need to have somebody. Is it autonomous? Is it recorded, or is it autonomous? Like, do they need someone there?
They mention avatars repeatedly. I assume that means a real person playing some kind of role.
Yeah, but
maybe just one person as a games master kind of thing. I don't know.
They did say games master, yeah. They did. What about, we know from the research, computers, never buy an Apple is my advice. 1 second, I have to wait for my...
But buy their shares instead of their hardware. That's the tip for the day.
My $2,000 new Mac, which is as slow as anything. Anyway, so they've got nearly 1 million from our forecast. They've got nearly a million, but from their deck, they did mention that digital acquisition was big for them. So I think this is interesting. And like, let's say it's $9.99. Sorry, this is super scrappy because I'm doing it live. But it's $9.99 for the revenue. I mean, what's going to be the cost of SEO? An SEO agency, probably.
The sky's the limit. Yeah. As people who were here last week know, SEO and PPC is what we do for a living. Yes. Nevertheless, it's impossible to put a single price to what they're paying an agency. It just depends on what they can afford.
Yeah, it's quite difficult. We could probably actually do an episode on if they got their SEO and PPC right, what expected numbers, because we could look at things like search volume, things like that, which is what as Anthony said, it's what me and Anthony do for a living. But I think this is the growth opportunity because it's not limited. It's basically unlimited.
I agree to an extent, but only partially. I think the real issue for them perhaps is a step above that in the funnel. There is a certain amount of search volume for escape hunt, escape rooms, that kind of thing.
Yeah.
But I suspect if they had the money to run big awareness campaigns, whether display advertising, television, out of home, there's YouTube, there's lots of options there. It could well be that the untapped potential is higher than the number of people currently looking for them by some margin. It
goes into what we were discussing in the last call. Is it going to keep going? I mean, something that I'll actually open something now.
Even big brands in very established markets often spend between half and 3/4 of their budget on brand campaigns as opposed to performance. For a relatively immature market like this, you could easily imagine that building your brand and getting the concept itself known could be well over half of the total investment, perhaps three-quarters or more, just because most people haven't heard of them and aren't familiar with it. And so there isn't a huge market to tap into, but there is an awful lot of people who might be interested if only they knew.
Yeah, and that's the thing, is that digital, it's kind of interesting. You've got, for every customer, I think you've got two customers, because they might want to bring their workforce along for their Christmas party.
Yeah, agreed.
It's almost like one customer doesn't equal one, equals one plus, potentially 10, 50, whatever it might be, in terms of having that. As the CEO mentioned, I wonder if they're targeting large corporates and saying, you can have this amazing virtual experience with 100 people on it. It's only going to cost you 1,500 quid, but it's good for escape room.
Yeah, I mean, I'm sure there's an element of the corporate away day and team building. It's hard to imagine that that's their core market, though.
Yeah.
This ultimately I put in the same genre as computer games, not necessarily normal computer games, but arcades and other types of team gaming.
Yeah.
And although, there's always the odd company doing that for fun, it's maybe a day a year.
Yeah.
I don't think that's going to be, whereas an avid gamer could be playing games every night or certainly every week and buying new titles and the like on a regular basis. So I'll be impressed if corporate is more than 10% of the total once it matures.
Yeah, agreed. And I think if they can almost transform themselves into a gaming company.
It's how I see them. Not just traditional gaming, but paintballing, Laser Quest, the new virtual reality. They're all, to me, they're in a similar genre here, in that they're team-based kind of interactive games where you're trying to either kill each other or there's a similar mission that you're, whether killing a baddie or escaping a room.
Yeah, I wonder. I don't think it's a big pivot for them to say, we've got this escape game. We've spent the money to digitize it. I don't know, whatever that might cost, 10, 20, 30, 40,000. And then they've got it forever. And not only can they target people in their country, but think about the opportunities in places like in English-speaking countries, like that have very big populations: Canada, Australia, India, maybe. India.
Yeah. I mean, some of these countries aren't huge by population, although the economies are established. I have to say the real market is going to be China. When you read about massive online multiplayer games that have taken off and have many millions of users, almost always China is at the top of the chart when it comes to where they've managed to explode their user base.
Yeah.
It's not clear that they've even thought about taking this to China, how they would do it, what the competition is. We haven't even started that discussion. Well, I don't think they have.
Yeah.
But I know in terms of online multiplayer games, that's.
I think you're right, but I think
where the people are.
If they think, they've basically said in quite kind of unclear language from the CEO last month, that the US is going to be a high percentage of the value created in the next 2 years, which suggests to me that it could have 50 stores in the next 2 or 3 years, or less, or thereabouts, 30 to 60, I guesstimate.
Do you think that the stores are, looking ahead? Let's assume this is a business with legs and it's going to be around and growing in 5 to 10 years' time.
I hope so.
Do you think that the stores perhaps would have started to saturate by then? No. Whereas the digital, it can keep growing into places that couldn't support a store. There can still be people at home who want to play this.
No, there's a couple of reasons why I don't think it will get saturated. Because as mentioned in the previous call, I think there's the how many stores per density of population per area, whether it's per square mile or per square 10 miles or whatever it might be. There's that aspect that they've probably got a very long runway in terms of geographic coverage. Number two, they're going to be very, very well capitalized. If they're getting 30% return on money, that means they're doubling the money every something like two and a half years, which means, and they're also getting a lot of free cash flow in to viewers. That means basically free money from these franchises that are springing up all over the world, probably giving them between 20 and 50K every time, which means they've got some money. And what that means is, to answer your question, I think they're going to be able to do a lot of game development. And even if you've got an escape hunt in Watford, you might then have another one, which is escape hunt horror in Barnet. You might have escape room racing or something, or escape room detective, like somewhere else. So I think from what I've been looking at online in the last week as well, is I wasn't aware of this. I don't know if you were, but there's a big market for families. So families like these games rooms as well, these escape rooms. Did you think that could be a segment? I didn't think.
Sure. No, I mean, I don't see any reason this wouldn't be family friendly. My question to you remains, though, do you think that digital has the potential to eclipse the stores? That's really what I'm asking.
Yes, I do. I think that digital has enormous potential. I think it could be 10x the size of this business, maybe even 100x the size of the business if executed well. And I think it really does come down to the PPC and the SEO and digital acquisition, as well as the products. Obviously, they have to nail the products. But if they nail the customer acquisition, it could grow exponentially. Especially if they did other things like growth tactics, refer a friend, yada yada, viral marketing. But I do think that I think they're potentially slightly separate markets, in as much as I don't think the reason I mentioned families is I don't think all families would want to go online. They want a day out. They want to take their kids to do something physical, to get out of the house. So I think that the in-store experience will always be there. And I really wouldn't be that surprised if this company had 400 or 500 stores in 5 years' time globally. I wouldn't be that surprised. So basically 10-15xing the number of stores, which means revenue could be 10 to 15x what it is now, just the offline revenue.
So if you can give me a minute here to share my screen.
Sure.
I may have something of interest to you.
Can you do that? Yeah, I think you should.
I have quite a few tabs open, so I don't want to get this wrong, but let me know when it's shared.
Okay, you have an option to share a specific tab.
Okay, well, there's so many that I'd have to. I know which one I have in mind. Just share the. So if I click share screen, I only have one monitor currently. Right. I'm just going to share the entire screen and just pick carefully because I know it's this one that I have in mind. So Ahrefs is a popular tool used for digital marketing. What I have here is I put in as source keywords escape hunt and escape room. And this is
your screen actually, Anthony. I just got to add it to the stream. Here we go.
Okay.
I really should be able to.
This is a common, popular tool for looking at search performance, both organic and paid. It's currently set to look at search volume in the United Kingdom, though.
I want to take a step back. What is search volume? Do you want to just describe it to the audience?
Yeah. So when you do a search on Google, that's a search. Whether you click on one of the paid ads or one of what are known as the organic listings is a secondary matter, but searches are searches. And indeed, many customers don't even know what they're clicking on. They just see something of interest and they click. There are other things you can click on, including map listings and products to buy often. But we're not trying to get into the nuance here.
Yeah.
Sorry. And so what I'm trying to do here is just look to see, is there established volume? And if there are other phrases we can use as a starting point, I can add them to the list.
Is this monthly volume or is this yearly?
This is monthly. And
look at that global volume there for escape room. over
Yeah.
a million a month. That's quite high.
The data is derived from data shared by Google themselves, but the numbers won't perfectly match Google because this tool splits out every term individually. So like escape room and escape room, singular and plural, would be combined when you look in Google, but shown separately here. So it's very granular, the numbers. The idea right now is to not really kind of get too deep into any one phrase. So I will say escape hunt, is that the right name?
Brand. Yeah, that's their brand.
So I'm just going to put that in as a single word as well as two words, just to see how they compare. And the point I'm getting at here, which I hadn't expected, all of the high volume phrases you can currently see, pretty much without fail, are escape room. In fact, the first escape hunt phrase is relatively small. I'm going to scroll down. It's down here.
But remember, they've only got 40 stores and they're getting what, 8,000 views, searches a month. That's quite.
So, although what we can see is the search volume for their brand name is frankly somewhere between small and tiny right now.
At the moment,
the general kind of category they're in, the category of escape rooms, is relatively substantial.
Yeah.
We're looking at nearly 300,000 searches a month, and there may be seasonality here. It wouldn't surprise me if it goes up around Christmas.
Yeah, but let's think about this. I mean, it's not super scientific, but let's say the overall traffic for escape room is somewhere like 1.1, 1.2, something like that every month. And if they're getting 8,000 a month,
yeah, I mean that is global.
Less than 1%, so it's not that bad. Is that right? 10% would be 100. Yeah, 1% would be 10,000.
Let me take escape room out of this for a minute, and let's just initially look at the UK numbers. So in the UK, we're talking a total volume of about 5,000 searches a month for escape hunt, whereas escape room as a genre, we're looking at basically 280, call it 300,000.
Right, so that's let me do the maths on that in my head. It's not very easy for me actually. 6.
So
12 times the volume. So it's not bad actually. I considering they only have what, 10, 11 stores in the UK, to have 5,000 hits a month. If you imagine that each person that's searching is thinking of a group, they're not booking for themselves mostly. They'll be booking for a family or a group of friends.
Yeah, I mean, out of, call it 300,000 in the market.
Remember, I'm a bit of a bull here. So I'm gonna be a little bit positive.
They have maybe by brand name, they have 1.5 to 2% of the total volume is name recognition for themselves. So the good news is that there is very substantial potential here, because they don't have to just advertise on their own name. That's the easy bit. They've got stitched up.
Exactly.
Really, if their market share, if their share of search is currently coming in at about 2%, best case. Well, no, searches are searches. This is not specific to organic or paid. So that means that 98% of the searches being conducted are not loyal to their particular brand name, but presumably anything and everything is to play for. If you search for an escape room and you see an escape hunt, and that was the nearest or the best, I can well imagine you would click on that listing, or it'd certainly be one of several you'd consider.
So it's probably just in their niche, they have the opportunity to go up 50, 100 times just from the current.
The other thing to bear in mind is that we can get a sense of the online play here. So although escape room as a generic term is by far the highest volume, something like a quarter of the total, the way that breaks down online, given the year we've had, is by itself 10% of that, and there's other variations here.
There's a virtual one, I think. If you go down a little bit lower, there's virtual escape room.
So splitting, if we ignore the generic terms, it could go either way, and compare the location based, like London and Birmingham, volume to online, I would say the online could easily already be 25-30% of the total volume and probably growing quickly.
Yeah.
So it's not hard to imagine online at
Is there a
some
way-
point taking over.
I used this tool years and years ago. I haven't used it for a while. Is there a way of pulling up on a trend graph over the last few years, or
Not here, but there is elsewhere. Good old Google Trends is ideal for that. And what we can do is exactly what you're suggesting. We're going to start off by looking.
someone on
You don't get absolute numbers for this. You only get relative. And what we can see, I'm going to put in, I want to look at the longer term trends, so past 5 years. And you can see that Escape, the whole thing was doing quite nicely at the end of 2019 when there was a big push. But even if you ignore that peak and look at the trend, up until lockdown started at the end of February, there was a nice growing trend for the escape room genre. And then volumes got hit hard overnight. And they've struggled in the recent lockdown as well. That's not a surprise. And what you can see is the relative volume of, confirming my previous suspicion that Escape Hunt is, around about 2% of the total market.
We know that it's at the moment it's the globe. It is the global leader in a massively growing market that doesn't have any leaders really.
It's very fragmented, and that in many ways is a good thing because it shows us everything to play for. We don't think anyone dominates.
If it could get to 500 stores in 5 years and have a massive digital presence, I mean, it could really. I think that's it's got. I think it's got everything to play for.
Yeah, I mean, it is interesting to see that they do have an established market to grow into. If we look at how this is performing in the United States, the picture is broadly similar to the UK.
I think it's slightly better actually. If you look at the overall
their lockdowns haven't been as severe because even when some states locked down, often others were open or at least were only partially locked down. So the picture's a bit rosier. Of course, they don't have much presence in America yet, but it wouldn't surprise me if they can scale the online games through America much quicker than they can scale physical stores they have to open. So
Ahrefs, they said that the price per click was $1.
Yes.
So that's what I'm curious if they have a £10 and it's equivalent in the UK for 60-70p. But they're known, I think over time, maybe not right now, but over time, they'll get more and more known as being a leader. Their cost of acquisition could be £5, £4. And as you said, that buyer might be somebody that likes to game quite frequently. They might game 10 times a year. And if they get a cost per acquisition of £5, and the gross revenue on digital is probably quite high, isn't it? Or even the net revenue?
I think they're likely to find they acquire a mix of customers. A percentage of them, maybe 10, even 20%, could be both loyal and frequent customers.
Yeah,
I'd be surprised if it's more than 10 to 30%. I imagine a lot of people are just curious because they've been invited to one as a one-off.
Yeah,
but there's no real kind of commitment there. But certainly, I mean, one of the things that's useful, you were asking about the potential to advertise. Well, knowing that it's an average of $1 a click, and say, for the good quality terms, it might be a pound a click in the UK. Well, knowing the volume and the cost per click, we can easily work out the maximum they could theoretically spend.
Yeah,
I know that you do paid search for a living, so just as well as I do, you're never going to spend by every click in the market. By the time you're getting past a third of those figures, you're likely to find diminishing returns kick in. But it does
Yeah.
give us a sense of the maximum traffic volume they could be buying from paid search, could be receiving organically. And then any growth they want beyond that will have to come from non-search based digital channels, whether display or not digital at all.
I mean, I personally think that this is something they should be really considering, is nailing. I mean, at the moment, they're nowhere near that because it was very difficult to get their website. I think they're not a digital first company, they're a digital second company. But if they can nail the online experience to allow people to book rooms, book digital games easily, invite their friends easily, I expect that they should be spending a lot of money online, because if every user is worth, as you mentioned, a percentage will be frequent and engaged users. Also, a percentage of those people will want to book for a group, so they're not worth £10, they're worth £50.
But we'd have to hazard a guess at their conversion rate, both for digital and real world, and the customer lifetime value, which may be inflated if they book for multiple, but still.
Yeah, I think that as the brand grows, I would expect that conversion rate to go up every year. It might start quite low, maybe, 3% or something, 2-3%. And then year on year, I would expect it to go up a percentage as they add more and more stores and people get to know them as the go-to player, if you like, hopefully, in the space. I think the prominence and relevance of digital acquisition marketing will really
I mean, we could throw some ballpark figures together now.
Yeah.
Very quickly. Yeah, I mean, if you assume that their click-through rate
we should say this actually. Click-through rate is a percentage of people that see the ads and then click on the ads.
Yeah. So do you want to take a guess at what you think the click-through rate is?
And I think there's high demand, and I think if they had a nice, snappy-looking ad, either on display or search, displays like the images you see, or the search ads or the text ads.
My software here is suggesting an average click per search is around about 1%, which doesn't seem that high.
Yeah, but if they've got someone decent and they've got a snappy title, I think it's such a hot field right now. I would expect between 2 and 5%. Let's say they get someone crap, so let's say 2 or 3%.
Yeah.
No one gets it the first time, do they, Anthony?
Now you've got to multiply the click-through rate by how many clicks for each search. You've then got the conversion rate, which is how many of those clicks that they receive actually turn into a customer.
Yeah.
Now, it may actually help that at the moment we don't know the numbers, but if you think their click-through rate, call it, 4 or 5%, what do you think the conversion rate is? 4 or 5%?
I think to begin with, it will be low because people will be comparing. But I think year on year, I think it will get a lot better.
My point is this: if the total volume per month is in the region of 300,000, what do you get when you times 300,000 by a typical click-through rate, by a typical conversion rate? How many sales are we looking at coming for the entire sector?
Yeah, so 5% of 300,000 would be 15,000 clicks. £1 a click, that's 15k. And if 5% of those 15,000 clicks converted, 5% of 15,000 is 750 new customers. The new customers will pay.
Yeah, per month.
New customers will pay at least £10, but I think we should model that out at a group. So let's say 3 people in the group minimum. So each customer's worth £30. So that means that they're getting 22,500 and they're only paying 15k. So it's net.
Yeah, which would not be great figures, but you could also assume that on average they return once more within, say, the next year. So you're still looking at 25 to 30% of the total revenue on.
Remember that we're modeling out on those customers only visiting once. As you said, 20-30% might.
If we assume they on average visit twice, some will be more, some will be less. You
So
can
then
take a look at,
might be worth somewhere between 40 and £100. Let's say 80.
yeah, for a lifetime value.
Yeah, so 80 times 80 times I think we said
750.
750. Yeah. So what's 80 times 750?
It is 60,000.
On an ad spend of 15k. So that's a 4x return every month. Every month.
Yeah, which sounds about right, because out of that they also have to pay all of their costs, which for real world stores will be substantial. I can't imagine that paying more than 25% of their total customer lifetime revenue is sustainable. By most business standards, that would be quite a high ad spend. Though if you're young and gaining market share and trying to grow quickly because you got capital behind you, it might make sense.
I think 15k a month for a brand that, remember, it's not just selling the in-store games. They might be selling the digital games as well, the virtual games. So I think if they say in the first year they're going to spend 100 to 200 grand on online marketing, and they're going to return, they're going to get revenue of 720k. Then if it starts getting $1 million a year, let's say, so I think click-through rates will go up every year.
I think what this says to me, if you think about the figures we're talking about, the total UK market, they might be able to acquire customers at the rate of £60,000 of revenue a month. That's not huge,
but yeah,
what that says to me is that to grow a multi-million-pound business, you need a lot more advertising or a lot more footfall than you can generate just from search marketing.
Yes,
you're going to have to rely on your presence in shopping malls and other advertising channels to make the bulk of the sales.
Exactly. Yeah. If you're in these big shopping malls, outside of these lockdowns, how many people are going to be walking past? You have a poster saying, join online. You might have 100,000 people passing the door, every week, in some of these very busy malls, possibly. So yeah, that's why I think that it would be very, very challenging for them to build a digital only business, because it's going to be expensive to acquire customers. As you said, it's kind of limited, but complementary. I think together, I think they're interesting. And also, we're defining the search volume at the moment in a very constrained way, just on escape rooms. If they become online strategy, they have an online strategy games, side of the business.
Yeah.
World of Warcraft, I mean, it's a bit different, but you imagine that they could come up with maybe a simpler game which they'd pay for one-off tickets instead of,
I mean,
in a couple of years.
I know from experience doing some mobile app marketing, including mobile apps in Google Play Store, that's not search-based necessarily. Your ads are often shown in other apps. So, for example, if you're promoting your World of Warcraft or Escape Room Tile type game that's mobile app based, you would advertise in other similar games.
Exactly.
And there's certainly the cost can be relatively low for that. And I can imagine that could scale quite nicely for them if they're able to do that.
Yeah. Okay, so we've been talking about this business for a while. I think it's been a very interesting session. I hope it's been useful for everyone. What we've done is we've talked about the CEO, the 5 statements he's made about the next 12 months. We've talked about modeling how successful we think the digital proposition could be, with some guesstimates. Anthony, do you have any final questions or thoughts on what we've discussed?
Not at this stage. It'd just be really nice to see some actual figures be published for them, and I really hope they split out the digital revenue from the store revenue when they do release their figures.
I think they will, definitely. Great. Okay, so we'll stop this broadcast. We may be doing another one potentially today, but I think this has been really great. To give anyone context on Escape Hunt, again, we're not financial advisors. We're doing this for edutainment, combination of education and entertainment. Do make your own decisions. If you have a financial advisor or are using professional advice, do seek it. And this is just for fun or it doesn't reflect anything. But background on Escape Hunt is, if you do search for them, they had a precipitous drop in share price when they floated from about 150p. They had a lot of institutional backing. I think a lot of that left, or certainly a lot of people sold, and it went down to around 3.5 pence. It's now up to 40p, and that interview was 1 month ago. So I don't know when they're releasing their next results. Actually, I think that would be very useful.
Jake, am I right in saying you have a small number of shares in them?
I do. For transparency purposes, I bought at 16 pence, and I have a small amount, but I'm considering investing still relatively small, but significant to me. I'm considering investing a significant amount. Yeah, for me. Yeah.
I don't currently hold shares, though anything can happen in the future. And if you do happen to work at Escape Hunt or Escape Room and you do want help with your digital marketing, feel free to give us a call. So that's not the point of why we're doing this.
Oh, and exactly. And the other thing is, we did not talk about wearing grey. That's a coincidence that we're both wearing a similar. There you go. All right, guys. If you haven't, like the videos and subscribe on YouTube, Facebook, and Twitch, and we'll see you guys in another video. Take care, guys. Bye.